Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. There are a number of patterns that have made themselves known here on this daily chart over the last few weeks. Some I previously mentioned, some have recently appeared, and some, well, they became evident when I started looking at publishing my longer term views on LME copper back at the start of January. I'll start with the patterns I've already highlighted, and first is the October to November 2024 small, bearish, descending scallop pattern. This gave a primary target down in the 92.02 zone, which was achieved, and a secondary hard reach target down in the 87.50 zone around the lows of August 2024, and just underneath the dark blue neckline extension, currently at 88.01, of the upper trend line of the June to August 2023 ascending triangle pattern. The secondary target was, as I say, in the 87.50 zone, and the low in late December 2024 was 87.57. Thus, for me, it was close enough to call it reached. Next, in the case of not seeing the wood for the tree situation, this only became evident to me when looking at the longer term charts. There was a shallow July 2022 to October 2023 bullish shift pitch hook, which is highlighted in bright red on my daily chart. Especially the lower time. It's currently at, where is that? That's currently 87.60 area. 87.60 area. Which reinforces support from the previous lows of August 2024 and the dark blue neckline extension. At the same time, some resistances that I had often previously highlighted, for instance the oft mentioned congestion area between 93.95 to 96.06 and below the small congestion band between 86.65 to 86.86, these two, well, they were being capped and held up the market respectively. So one's capped them and one's held up respectively, much as they had done last year. Now, a new or newish resistance made itself more obvious since December last year, and that was the mauve highlighted medium moving average, currently at 93.05, which acted as a cap, especially on a closing basis back in December last year, as well as late January this year, and for a few days last week as well. This was breached last Friday, and prices pushed up into that 93.95 to 96.06 congestion area overhead, which as in there, within the very slowly declining gold long moving average, and that's currently at 94.46 within that 93.95, 96.06 area. Now prices have seemingly gotten stuck there. This is especially interesting as last week was a weekly key reversal up, and so far there's only been a very limited follow-on high to this pattern, which is looking precarious right now. Overall, all these actions have led to a sideways market within a wide range of about 8,800 up to 93.20. So what should we look for in the future? Well, I'd keep an eye on the 350% Fibonacci lines that populate nearby. We have below the July 22 to May 23 move at 90.29, then above, only a little above actually, it's right up where we are at the moment, is the October 23 to May 24 move at 94.80. This sits within the overhead congestion band, that 93.95 to 96.06 area. And finally, further below the market, the October 2020 to May 23 move at 86.86, which makes up a small support zone, 86.65 to 86.86. That is the current situation. LME 3-month aluminium. Much as LME copper, there are a number of patterns here that have made themselves known on this daily chart over the last few weeks. Some I've previously mentioned, some have recently appeared, and some, well, they became evident when I was looking at publishing my longer term views on LME aluminium back at the start of January. I'll start with the patterns I've already highlighted, notably the purple tines of the mid-December 2023 to late July 2024 bullish Andrews pitch hook. We're at this time just above the breached lower tine, which is currently at 26.07. We also have, for the same time period, a bright red, shallowy bullish shift pitch hook, and here we are just above the middle tine, currently at 26.08. In addition to these, we have the support, breached but seemingly repaired, of the flatlining gold moving average, that's below, long moving average below, currently at 25.39. Now this had been previously penetrated in early January and back between July to September last year, but has shown some resilience after a fashion. Then we come to the new patterns which have shown themselves, and there are two I'd like to look at specifically. The first is the less obvious one, the dark blue lower tine, currently 2386 of the long-term 2015 to 2020 bullish Andrews pitchfork. This one, to keep, as the name suggests, a longer-term eye on it, is the best option, as it sits just above some significant dynamic congestion between about 2345 to 2355. It's quite a narrow band, but it's there. The other is a more recent pattern, since November last year to January this year, and is, for a change, a bearish pattern. And that's the November 24 to January 25 bright green bearish Andrews pitchfork. Prices are at this time just at or around the upper tine, currently at 2646. This one is the most under threat, and I am quite prepared to finesse this into a shallowy bullish bearish shift pitchfork or retire it completely. However, should prices decide to move lower, then keep an eye on the previously mentioned highlighted 50% Fibonacci line below of December 23 to May 24 move at 2454. Finally, a new pattern, one that's emerged this week, and it is to look at the whole mid-October 24 to date action as a very shallow bear channel, currently 2463 to 2694. This is highlighted in dark blue on my daily chart. Right now, I suspect that this pattern might just take over from the green, the bright green, bearish Andrews pitchfork, and even possibly the bearish shift pitchfork, but we'll see. LME 3-month lead. Now, 13 weeks ago, I detailed a number of supports below the market at the time. These are still very significant ones now, and I quote, "Some of the supports, some of them well below Fibonacci-based congestion otherwise, are between 1994 to 2002, followed by the June 23 low at 1976, which looked, how shall I put this, less interesting. Then the 2024 low in August at 1917, which I suspect is a function of the nearby 2021 low at 1908. There's also a neckline extension, that's currently at 1917, of the July 23 to February 24 head and shoulders continuation pattern. The reason I mention these support below is that they contributed in eroding the decline we saw in early to mid-September, enough that it was stopped and turned back upwards." End of quote. These supports also eroded and turned the market back upwards in the middle of November, with prices peaking just under the long moving average, currently at 2081, before heading lower again. Thus, I said of the moves since then, to look at the action since August last year becoming a possible bearish head and shoulders continuation pattern for bright red neckline, constantly being tested, currently at 1951, and or the action since November 2024 today being a possible descending triangle pattern for purple upper downtrend, currently at 2039, and the bright red neckline being the lower trend line. Add to all of this the previously mentioned slowly declining dark blue neckline extension, currently at 1970, to the July 23 to February 24 head and shoulders continuation pattern. Well, as you can see, we have an interesting mix that is gradually getting narrower and narrower each day. I said 13 weeks ago, and I quote, "I suspect a lot will happen on what the market does, will depend on what the market does at the neckline extension below should we get down there." End of quote. Moving to this past week's actions, and the main feature has been a move up to hit and then be deflected back down from the overhead medium moving average, currently at 2020. Now, one can argue that this is resistance on its own, and that's fair enough, but I would counter that it has not shown any such instinct back in December or October last year, and that rather this is the outlying resistances of the purple July 2024 downtrend, currently at 2039, that makes up the big descending triangle pattern. This all leads me to my final point, and it is to me the most important point of all. At the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down. Thus, all things going forward, this year should be seen in the shadow of that pattern, as I consider it the most important of all the points raised here.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.